If borrowing costs have stabilized, what exactly are buyers waiting for? Now, for much of the past year, the answer felt obvious. Interest rates were rising, buyers stepped back. Hey there, and welcome to issue 505 of the Guelph Weekly Sales Report. Let's look at this. The explanation doesn't fully fit January's numbers. Mortgage rates for insured buyers have largely settled into the mid 3% range. The Bank of Canada rate has held steady, yet nationally home resales declined again in January and new listings have increased. Locally in Guelph, we're seeing a similar pattern, softer sales activity and gradually building inventory. Rates have stabilized, selection has improved, so what's holding buyers back? What this looks like now isn't an affordability shock. It looks more like hesitation. When buyers feel they have time, their behavior changes. They compare more carefully. They negotiate more comfortably. They wait an extra week before making a decision. We've been in a more negotiable market for over a year. What's different now is that rates haven't fallen dramatically, and activity hasn't accelerated either. That tells us confidence, not cost, is likely the bigger factor here. So, inventory is building gradually, not dramatically. Homes are trading below list in many of the segments still. Days on market have normalized. These aren't signs of distress. They're signs of balance. Now, historically, markets like this tend to reward buyers who are prepared and clear on what they want. Not because prices collapse or might collapse, but because leverage exists in a steady way. So, if you're trying to decide whether to move forward or continue waiting, this is where a short conversation could be very beneficial to you. Not to predict the future, but to understand where you sit in today's market before you commit to a direction. Thanks for being part of our community. Enjoy the weekend.